In today's video, we're going to take a look at XLU, a sector that's standing out yet again for another really nice pullback opportunity. We'll splice and dice XLU, the utility sector, using Fibonacci, using price and trend clues, and using volatility clues on intraday timeframes. Let's get started with the daily timeframe first. The red lines that you see drawn on my chart are Fibonacci extension levels. That's using this tool right here, and I have a full course, which is a free course if you're interested in learning how to draw these Fibonacci levels yourself. The overall premise is quite simple. We take a swing high to a swing low, so that's your two first starting points, A and B, and you compare it from point C, a starting point, to project where we think the downside for this particular, in this case, ETF could be. Now, using these swings, there's a few different levels we have. The first was 44.20, and take a look at what happened at this 44.20 mark. You can see just how long we had this back and forth chop until just recently we finally broke that support with this red candle. Now, the next level we have down below, which you should notice there's two lines here at the 100% mark, is near 42 point, let's call it 15. And if you want to keep this nice and simple, just use a range of, let's call it 42.20 to 42. So a 20-cent range, which is where we're looking for the support here inside of XLU. That's the next level we have down below. Now, say we break below both of these extensions. What does that actually tell you from a layman's perspective? Well, that's telling you this particular pullback inside of XLU is not like the ones we've had before. We're looking for a little bit deeper. Well, where are the next levels, the deeper pullbacks? Well, we had this pullback right here, this swing. We had this larger swing as well, and you'll notice we had another large swing right here. With those levels, we have these final three lines that you see on the chart, 40.69 to 40.47, so another about 20-cent zone, and then finally near the 38 price mark. So we have three different checkpoints, if you will, that we think price can get to now. We'll say A near 42, B near this 40.50 mark, and C near 38. So those three big high picture levels we can gather from Fibonacci. Now that alone doesn't give us enough confidence or clues to just place blind orders, not for me at least. I want to see some more clues, some more confirmations. For that, I've layered in our seasonal analysis indicator. In fact, I can just add in that indicator so we can keep our charts nice and clean right now. I have 5 years worth of data loaded on, and what this will tell us is what is the overall seasonality pattern for XLU. And as I make this video, we're in December, so what I want to know is what should the next few months look like? What should I have in mind in terms of my expectations? Of course, there can be minor gyrations in between, but this gives us a comparison of the beginning of the month to the end of the month and what ended up happening. Now, the first number in our seasonal analysis indicator, this is also a free indicator. I'll leave a link in the description box. The first number tells you the percentage of time that price closes above where we opened. So what that means is how often is this a green month for whatever symbol you're looking at, in this case, XLU. The second number tells you the average move. So it takes the closing price minus the open of that month, and it divides it by the open to know, was this a gain or was this a loss? And if so, what is the average amount? Now, the clues we can gather here are December, January, and February is this 3-month patch, the only 3-month patch that we can see where we should expect a little bit of choppiness here. And that's using 5 years worth of data. If you load it in 20 years worth of data, you'll see January becomes a little bit more of a coin toss. December, February, still a weaker month. January, maybe sometimes is a good month, but really just in your head, expect the December, January, February period to be a little bit more choppy. Now with that, if we combined, say, our 42 level with this idea of expecting a little bit of chop, to me, I might be looking at support here, but not for that support to be, let's call it a strong rally, a strong bounce, given that I should be overall expecting the next 3 months to be a little bit weaker. We might even drift down to about 40.50 based off of what seasonality tells us. So now we piece together some of our trend clues as well. Support, resistance, some very basic things, and then we can take a look at intraday volatility, see if it's picking up or not. Now, using some very basic support resistance, which I'm sure all of you know, we can take a look to see that our next place where we expect to see some level of support would be somewhere in this 42 to 41 zone. And really, you might argue that this entire zone is your pullback into previous high turned into new support, along with the lower end of this range, which, if you extrapolated, gives you a lot of overlapping zones for this entire chunk of period. So on a zoomed out, if you're looking at trees or the forest, excuse me, not trees, then this zone seems like a very lucrative support zone that you're looking for price to have pulled back into, chop around before it starts to make its next leg up higher, breaking above 46.89. For those of you looking for an example of this, mind you, XLV was a great example of a similar pullback. We had this Fibonacci pullback, gather around, we chopped. This looks like it was not a whole lot of time. However, if you take a look at how many days actually passed before price started to move, this is 135 days of activity that we had here. So that's giving you an idea of how patient you may need to be for this particular trade, given that it's a sector trade. However, when the moves do start to get going, it's these pullbacks that you are waiting for. Now, finally, we layer in our intraday volatility to figure out when and where we can take advantage of some of these biases that we have. So take a look, for example, at Monday's activity. We'll see price action sold off straight into our volatility box zones, chop around, and then we bounce from there. Prior to this Monday, if you take a look, it was the previous Monday's activity. Let's see if I can get back to it. Need a little bit more data here, but that was the last time we had similar volatility inside of XLU that we could take advantage of. That was right here, the previous Monday, sell off midday, looking to take advantage of a buy the dip situation and see just how stress-free this trade is inside of XLU. Now, this is using the hourly models. If we can get an entry with the daily models, that would be one that I would much rather prefer. However, you'll see that those are even harder to come by inside of XLU. So as we start to enter this period where we hit 42.18, where we hit 40.69/40.50, if we overlap with any of our long side zones here, that to me is almost the best setup that we could get here inside of XLU. That's very similar to the setup that gave us our previous entry in XLU. So there you go. XLU, a sector I'm looking at, the exact levels I'm looking at to take advantage of a pullback opportunity, and the way to play it using the intraday volatility clues. Take care, everyone. Good luck trading, and I'll see you in our next update.